Are business loans a bad idea? They are if this happens. Hi, welcome in. This is Michael from Viral Funding Solutions, and I will get right into it. The answer is yes and no. So there are two sides of this equation. Now, they are bad business for you if you're using them for the wrong purpose and purposes. Listen, here's what I mean. People think they need funds when in fact what they first need to do is understand how structured, how sound their business is. By that, I mean things like on the accounting side, have they built the right foundation for them to take on the business funding? And a lot of business owners, quite frankly, don't have all of that together. And it's whether you're starting or you're just over that hump, or you've been in business for some time and there are some holes in it that you need to cover. And perhaps that's why you're seeking funding, but there are multiple uses for it. But perhaps you don't fully understand, if you take this over here, will it help keep my business stable? Will it help keep it afloat? Am I just surviving? Do I need it to increase my profits, and so forth? And I'm sure we do, in a sense, know that. And there are many of us who do like say, hey, this is what I'm looking at, and this is why I need to use these funds. I'm about to hit a heavy season, and I can really use it. The discrepancy and the misunderstanding where people come from when they think business loans are bad is because it puts them into debt. But how much debt is the question we should be answering. Some people go into severe debt because they can take on more than they can actually chew. And then some others just take enough, who then go, hey, this is positive debt. There's no negative outcome out of all of this. I'm taking this and I'm injecting it into my business and using it for the right purposes, and I'm paying it back in however much time it takes me, right? There are different products and services out there where you can get different terms, different rates, interest rates, factor rates, total paybacks, the type of payment. But where it becomes very bad, this is probably the most important thing. It's a bad idea if your repayment exceeds down here, which is the benefit. So your repayment needs to be down here and the benefit of using your funds up here. And to illustrate that even more is, if you are taking a business loan, whatever product, there's a lot of different products and services that I won't get into in this video. I'll touch upon it lightly in a moment. But if you are taking those funds, maybe let's say it's a lump sum of funding. You are trying to inject it to use it for a certain project or projects. You know where it's going. But you're like, oh, well, the interest is just too high. You're telling me it's this amount there. You're telling me that the type of payment, they only offer monthly/weekly. I'd prefer a monthly payment. I actually wanted longer terms, more than 2+ years. But here's where the problem persists. And it usually happens at lower tiers. And there are different underwriting guidelines to all this for different products and services, different lenders, brokerages, etc. So ultimately what I've seen with helping out a load of people, a load of business owners get funding and all types of different services, is usually those who can't qualify for as much as somebody else can, at least this moment, tend to be ones who backlash, complain. In other sense, they can struggle, not all the time, but it happens to be the case when your funding details aren't where they need to be. And we're talking about things like time in business, your FICO credit score, your monthly sales/revenue, the amount of deposits going to your account, how do your bank statements look like, time in business, all this stuff, and even more that we look at in the underwriting process. And this is where a lot of people think that business loans are a bad idea, even before they've gone started, is because they've probably heard from somebody else how they got declined or they had a bad experience. And there are different illustrations I can give, but like one of these being how somebody took out a cash advance to get multiple trucks that were over 100,000 and they were given this payment back, and they were like, well, I don't want to do that ever again. And it's because they weren't properly educated. They didn't understand what other option or options are on the table, if they even qualify for those. If they don't, what's another one? What's the first, secondary? What would be the best solution? And by the way, if this is the first time you're watching me and you would like to get help, get a better understanding of what you can qualify for, such as what is your best funding option and options, very thoroughly broken down into qualifications, how it works, step by step, the numbers, a conclusion, bonus tips and bonus material. I'll leave for you a questionnaire down below in the description where you can get a very personalized and customized email response just by simply filling out some funding details. It's not an application, excuse me. It's a questionnaire. So when it lands into my email, I will analyze, evaluate it, and give you a proper response back via email, what you can qualify for, your best funding option and options. And even if there's nothing you can get approved for at the moment, I'll still show you that and give you a lot of bonus material. So that'll be down below in the description, and all other resources on different places where you can go and apply and what I recommend most. So make sure to look for that down below when finished here. So yeah, going back to that, they are bad business, what I want to leave it at, because you maybe are under the impression that you should get these longer term. See, the EIDL loans, even the SBA loans of all that, from all that, it's programmed us to think that we should get these longer monthly payments. We should get these lower 2 to 5%, 5 to 7% type of interest rates, that we should be able to use the funds like however we choose. If we wanted to use it for survival money, we can go and apply there. That's what it's for. But we always neglect that there's another side of this equation, right? Like I spoke about, that we need to think about, hey, when does it become more than just the interest rate, the terms, the type of payment? It's the repayment. That's what it is. So when you get, not always pre-approved, but when you get an offer, you'll know what you're going to be expected to be paid back. And if it doesn't make sense for you, it will become a tug of war all the time. You're going to be trying to go from one place to the next, and you won't be repairing the actual diagnosis. So I've had a lot of people recently who come to the conclusion that it is business loans are bad because you get into the debt. But for how long do you get into debt? And what are you using those funds for? Yeah, it's bad debt if you don't make good use of it. If it actually hurts your business, your cash flow is suffering. There are products that if you're not in a cash flow positive position, you could use a different one. I wouldn't want you to take this one, but let's see if you get it approved for over here. If so, that's what I recommend you do for the time being. When cash flow gets better, maybe you have a project over here you would like to inject a lot into. Perhaps we can try to approve you for this one. You can use a line of credit for that. But where people think that business loans are a bad idea is because of the debt, but it's also the amount of debt and for how long you're in debt. There are some people who can get approved for a certain amount, and they're like given 25, 10, 20, 25, 30 years, and they never end up paying it back in their lifetime. And then you're like, yeah, but I've been in debt for this amount of time. But you went that direction. Instead, I could have shown you something here where perhaps we could have given you something shorter. We could have given you between 4 to 24 months. Let's say you get approved for 12 months if you can qualify for that. And you go, well, it's better than having 2, 3, 4 years, 20 years. Yeah, my repayment might have to be a little bit higher. It might not be like the $300 per month or 100, 200, et cetera, on whatever, how much funding you got. Maybe you'll pay back 5,000, 6,000, 7,000. But if your business is sufficient enough, it allows you to do that. And then is it a bad thing? Not necessarily. And there are some people, actually, I should say a lot of us, because I've been in this position. I know the feeling. I know what you're going through. I know the psychology of being a consumer of getting business funding, credit cards, and so forth. I didn't even meet the minimum of 5,000, which is usually what lenders look for. They can qualify you with a 450 and above, which I had good credit, just built it up even more over time. And I didn't meet all that with my businesses. And so I had to go through all these things, thought there were loopholes. I never did anything fraudulent. I've had a lot of people recently who they want to get business funding, and I get email notifications and I get contacted. I'm even looking at my phone at this moment and I see one right here, why they did not get an offer, not even an offer, right? We didn't even get past going, just trying to get them an offer and seeing if they wanted to approve. People will alter their bank statements. People will cause fraudulent activity. They will go into defaults, have a judgment. The list goes on and on. That's not all of them, but those are just some of the big ones. And they end up on a data merge, which is where lenders can see in the system what your approval odds are of getting a loan in the future. And if they've seen you come through, or they know that that profile looks the way it does, they will not go through it. They will reject it. So that's another part where people think business loans are a bad idea because I don't get what I want and I deserve what I should get. Well, we have to readjust what we think. It's like an airplane. You go 1 degree to the left, you end up in Washington, D.C., and another one, you end up in New York, or so forth. So just adjusting that. And what I mean by it is being educated, tuning into my content, which I release here on the blog, social media, etc., will greatly help you get a better understanding of what you need to, when you walk into an application, you know, with 110% confidence and certainty that you will be approved without wasting time, days, weeks, months, and even years of sifting through old, outdated information, scammy type of stuff, fluff and theory based. I have the most up-to-date information. You can pick that up down below. And in fact, it comes in with your questionnaire when you fill that out if you haven't already. But there'll be more information about how to get a hold of me. So just a few more points and then I will let you go. So yeah, the use of funds, it can become a bad idea if you don't know how to use them. And also, number two, the structure of your business. Is it meant to take on that funding? Is it not? Then it would repel you. And so if you're repelled, what should you do? Right? It's like a bungee, being pulled down and then back up. So if you didn't meet it down here, you got to come back up to then come back down to then get approved for that. So instead of treating the symptoms, which a lot of us end up doing, I've been a victim of that. This is probably your wake-up call where we have to treat the diagnosis, not the, well, it's just credit. And then you go and apply somewhere else and they tell you the same thing. You try to go through another lender, but you haven't fixed the diagnosis yet. You have to come over here and raise your at least 580 FICO to a 600 or 605, 10, and then you'll get approved for a longer term. Instead of 6 months, we'll get you 7 to 11 months. We'll just see what we can qualify for you in there. And if it makes sense for the use of your funds and so forth, other things in the background. So it's more of a complaint that I see with most people is the programming and the belief that business loans are bad. It comes from that. It comes from thinking that, well, the idle loans have lower interest and they have longer term, so everything else should. So everything else seems like a bad idea to take on that kind of debt. But if it's a negative net outcome, not a positive net outcome, then you will always think it is a bad one. And if you don't understand the qualifications, the requirements, and understand the process of how to fill that application out, is it online, 100% DocuSign, et cetera, what do you have to do? You will always think it is. And that's not even on, that's on the foundation level. That's not even going through the meat and the potatoes when you're taking that offer. But yes, they can be a bad business loan, or they could be bad for you if you don't understand, you know, one, how much debt you're taking on, for how long you're taking it on. Does it require you for you to take it on that long? Can you pay it off sooner, which I recommend a lot of you guys do. Being realistic about longer versus shorter terms. Not everybody qualifies for longer terms, and not necessarily does that mean that's the best thing. You may just qualify for a shorter. You may qualify for both. I've had people who qualify for SBA 7A loans, and they go, no, I just want at least I can qualify for, oh, you said I can qualify for about 15 months there, that's fine. And they go, well, yeah, I'll take 150,000, I'll take 300,000, 500,000. And then if it's not everything they get up at once, they can come back and get it. And that's another part why people think business loans are a bad idea, because they don't always get everything they want up front at once. You can come back, refinance, pay out 50% of it in about 45 to 65 days. We can reevaluate you to get you more. And then you can get approved for more. You can get better rates, lower the term, or increase the terms if necessary, lower the rates, et cetera. There are many benefits to this side. But for those of us who are in the, not in, and even it happens up here in that tier too, we think they're bad, but a lot of it does come from the lower. It's like the pyramid, right? When we're looking at profiles that are less than desired, I'll say that, that's where it becomes a tug of war, where we're like, we don't have the best revenue, we don't have the best credit score, we don't have the time in business here, but I think I deserve that. And then it's like, well, I need a safety cushion so I can get an extra month or two. I feel like I deserve a greater business loan or longer term because I have one here. It's not how it works. And so, yeah, keep that on the back of your mind. I don't think I've left anything off. Yeah, just understand that there are different products and services. So you may think it was bad because of this experience, but then there may have been a better service to go through, or it was the same service, you just didn't get the right details, or you just weren't given a better option in that same industry. And it's unfortunate because a lot of people do. And then I get a lot of people who haven't gotten funding, and then there's a lot of people who have, and they come to me and they ask me about a lot of questions. And I do my best to answer them for you and everyone else. But I want you to be in the right headspace before you go into an application in the right headspace, when you approve the offer or decline it, understand what it all entails and making the right move, thinking smart and being decisive at the end of the day, because everybody has a different situation, why they use the funds for this. And if you're just using it for survival money here, but you'll see over here, I can't take the funding because I'm not in a position for growth and expansion. And you're like, well, that's why it's bad. They should allow me to. Well, with private lenders, it's usually expensive, sometimes very expensive. It's not inexpensive. But if the benefit exceeds the repayment, then it makes sense. And I came out with a video, and I might leave it down below. Our business loan's a good idea. And I talk about it from that perspective, and I touch on both sides, like you're kind of seeing here in a different light. And if it's down below, it is. If it isn't, I'll try to put it there in time. But yeah, when you're coming at it from, yeah, the repayment just doesn't make sense. I have a different loan over here and I can't do that now. Or yeah, I'm a cash flow. And then we might have to look at a different service. If you don't qualify for that, what do we have to do? That's right. We have to find ways of how do we increase our bottom line? Can we take on another business, or can we take on a supplemental income, a job, and then fuel our business that way? Can we turn to friends and family, crowdfunding, however we look at it? But to come to the conclusion to say that business loans are a bad idea because you get yourself into a negative debt, and because you did not get the right terms, the right daily payment, weekly, monthly type of payment you're getting, and the type of rates, interest rates, because they're higher, is not the answer. It's more about the repayment, which adds on that. But you have to look at it finally and say, well, oh, that's $100 per day, $300 then. Oh, I'm getting a $400 payment. Well, this is why I'm getting into this. Now I make that evaluation and I say, okay, does that make sense for me to move forward? But don't cut it off short. Open up your world, and everything will come to you naturally. So that'll be everything from me in this video. If you need any more help, please refer to the description down below for picking up my free resources. Fill out that questionnaire if you have not. It will greatly save you a lot of time, and that's one of the fastest way, actually the fastest way to get a hold of me. And when I evaluate, analyze it, I can give you a proper response back via email. And for all other material, please look down below. Any questions, comments, or concerns, voice them down below. If you have not subscribed, please go ahead and do so and click that bell notification icon so you do not miss any future videos I come out with. And if you got value out of this, yes, please give it a like. And if you feel somebody else will get value out of it, go ahead and share it with them so they can come and see how to get help. And that is everything from me. Talk later.